Hello everyone, how are you today? It's Kay. So this is the 27th of October on Wednesday. So I hope you're having a great day today. So this is an early live stream, but hopefully you enjoy until the end of the live. And in case you miss it, you can always watch the video in archive and enjoy my talk for today. So today's topic is about the Fibonacci retracement. I haven't been talking about the Fibonacci retracement for a long time, so that's why this time I decided to talk about it so that you can have the correct way to draw the Fibonacci levels. Because I have been using Fibonacci levels, Fibonacci retracement strategies for a long time, and I found a very effective way to use it, and that's why I just wanted to share it with you. So, and also today, my throat condition is not really good. Yesterday, I wasn't really good in condition, and today also is not really good condition. So, yeah, I think today I will keep it very short, and maybe I will do it until maybe for the next 30 minutes or so, 20-30 minutes or so. So yeah, let's get started right now. So just as a quick disclaimer, this information today is basically based on my own understanding knowledge. So when you take trades, please do at your own risk. And also, since this is a live stream, if you can please follow the rules and guidelines, that will be great. All right, so thank you for joining, everyone. Great to see you here. All right. Yeah, let's see. Karan, good to see you. David and Krongwat, Milos, Roban, and Barka. All right. Minoru, good to see you. Thank you for joining, everyone. Yeah, so today, since I have things to do at nighttime, I decided to do the live stream a bit earlier and talk about the Fibonacci retracement today. So let me turn to the charts. So let me start from Euro USD. So Euro USD, you see the market has been going down this way. And so here's how I draw the Fibonacci level. So basically I use Fibonacci on any time frames, whether it's a daily chart, a weekly chart, or a 5-minute chart. I draw the Fibonacci lines on any time frames and capture potential bounce or retracement. So Euro USD is not a good example to draw the Fibonacci level, and I will talk about that reason later. But let me look for a better example in the current market situation. So let's see. Okay, Euro AUD has been going down, so there's no retracement, so it's difficult to use this one. And let's see, pound, Euro pound is also a bit retracing, but since this is a huge downtrend, I don't use this in the case. Euro JPY looks good. So in terms of Euro JPY, here's a little question for you, is that when you draw the Fibonacci in this particular market, how would you draw? Like, would you draw it from this bottom, the top here, or the second previous bottom to top to draw the Fibonacci levels? So let me hear your answer quickly. So number 1 is here, number 2 is here. So if you're in front of PC or mobile, simply type 1 or 2 on the chat so that I know how you would draw the Fibonacci. So once again, my question is, do you draw the Fibonacci from number 1 to top like this, or number 2 to top like this? Which one do you take is my question. How would you draw the Fibonacci level in this kind of situation? Okay, I start to see some comments. All right, top to bottom, number 1, okay. Number 2, 2, 2. All right, number 2, 2. Okay, that's nice. Yeah, exactly. So I draw number 2 to the top also. Yes. And let me tell you the reason why I take number 2. Or can you tell me the reason why you take number 2 instead of number 1? What's the reason of that? Hopefully the connection is okay. Yeah, looks like recently from yesterday, the connection has some issues, so I might need to reset the router. But hopefully it's working okay today. Yeah, my throat is not really in good condition right now. You can tell maybe my voice is a bit lower because yeah, since yesterday I have a sore in the throat, and that's why I think I will just keep the live a bit short for today also. Okay, so for those who pick up number 2, what's the reason why you take number 2 instead of number 1 is my question. All right, N wave, all right? Milo says N wave. All right, Celeb says retracement started from number 2, all right? All right, Sanchez says more retracement, okay? Miro says false breakout number 1, bottom it's number 23, okay? Gampa says because number 2 is from the recent low. Yeah, that's true. Oh, thank you, Minoru. Take care. Yeah, I will take care of my throat. I drank some tea last night and took some medicine, but still, I'm kind of still suffering from this throat ache. But I'm sure it's gonna be gone soon. So hopefully, yeah, it will be over soon. But yeah, the reason I take number 2 is because this is the most recent low. You know, the market, when you think about the market and waves, the market goes up or goes down on the wave formations. So in other words, when the market goes up, it goes up on the N wave, bullish like this way. And when the market goes down, it goes down in the bearish waves like this way. So the best way to use Fibonacci level is to capture these bounces as it goes up, or these retracements as it goes down this way. And in order to capture these bounces, you want to use the low and high and see if this bounce is one of the Fibonacci levels. But if you take the lowest low to here and draw this bounce as Fibonacci, this is not really a correct way. I mean, you can actually take it, but you can't take this small N wave continuation. What you're doing is basically you're trying to capture a bigger N wave like in this way and see if this is a bounce or not. If that's the purpose, then you can draw it from the low to high and you take the Fibonacci bounce by drawing it and expect the market goes up from there. But since as per wave principles, you better use the Fibonacci levels on these, smaller bounces, because this is more effective way to draw Fibonacci levels in this way in any time frames. So, and from this reason, in this case Euro JPY in the daily chart, I use the most recent low because now it's retracing backwards and I want to see how far the market retraces from here. I mean, it might retrace all the way back to Kijun-sen, or it might be retracing back to the Kumo, or it might stop somewhere in the middle. And to see that, I draw the Fibonacci level from the most recent low to most recent high, like this, and I see the bounce. 38.2 is very close. So the market could retrace back to that level, it touches it, and it might goes up this way. Or once it breaks that level, then it might retrace all the way back to 50 level or Kijun-sen area. They are so close, and then it may bounce from there too. Or when it breaks the 50 level, and Kijun Sen also, then it could retrace all the way back to 61.8% and bounces up like this way. And when the market breaks 61.8% level, then it may all the way trace back to the Kumo in this situation. Or could retrace 100% and the market will be in a range continuously. So the point is that in this N wave, so there was previous N wave and now there is a potential new N wave forming, and you want to see how far potentially the market retraces, and that's why you draw it from the Fibonacci level from low to high, the most recent low and the recent high, and capture these potential bounces so that when it goes up, it becomes a continuous N wave in this direction. So with this in mind, I sometimes use the Fibonacci levels and also Ichimoku lines. So in this particular case, if you look at the Ichimoku lines, you see the Kumo's up, but Kijun Sen flat. So when you see Kijun Sen flat, that means the market is still in the middle of the retracement. The market is in the middle of the retracement. So in this case, it seems that the market has been bouncing 38.2%, but unless the Kijun Sen points upwards, the market might retrace backwards still, all the way to 50% level for Kijun Sen. So even if I see the next candlestick to be bullish and goes up like this way, if Kijun Sen is still flat, I don't count this as a bounce. I don't do that. But sooner or later, as market goes up this way, or ranges like this way, and then Kijun Sen turns bullish, and Kumo turns bullish too. Kumo keeps turning bullish, and when I see Kijun Sen really turns bullish, then I know that this was a 38.2% bounce, and I can trust it, and that will be the stop loss line. And expect the market goes up on this continuous N wave upwards like this way. So this is how you can actually combine with the Ichimoku and the Fibonacci in higher time frames. So let me show some other examples if I find any. And that's why in the beginning I said that Euro USD is not example, because this one, let me delete all the lines. So in this one, you see the market was on the bearish N waves. It was on the bearish N waves like this. So up until this date, which was 12th of October, we were able to use the Fibonacci level to capture the pullbacks. However, right now, the market is up. But not only that, it broke the previous high. Technically, it broke the previous high level here, which was marked on the 4th of October. It went up, and now it's going down. And because the market broke the previous high at 1.1639, technically, this is normal bearish in the wave. But this is what we call Y wave in Ichimoku. And when it's in Y wave, we can't use the Fibonacci retracements because this is normal N wave. So previously, it was reversed in the wave, but exactly from this date, the 14th, the market went up and broke the previous high, and although it's going down this way, this is no more bearish. And you can tell it from the Ichimoku lines also. You see the Kumo flat and the Kijun Sen flat, Tenkan Sen flat also. So this is flat and ranging, and you can't use the Fibonacci retracement in this case. If the market goes up this way, for example, if it goes up like in this direction, then you can use Fibonacci to capture potential bounce like this way and expect the market goes up. So you can draw it from the all the way from the bottom the top and see if the market bounces at one of these levels. That is technically possible, but usually I won't do this. And the reason is that this is ranging as per 5 lines, and there is no N wave forming yet from the bottom. This is called V wave or Y wave, and it's not N wave bullish yet. So usually in this condition, I don't use Fibonacci level because once again, it's range. So it could go up or it could go down, and we don't know which way it's going. Yeah, so that's how I use Fibonacci, or how I not use Fibonacci levels in this kind of case. So I use Fibonacci levels on the trending market because it works the best when you use it in a trending market. So let me look at some other examples. Euro pound, after all-time high here, swing high, the market has been going down this way, but since there is no pullbacks, we don't want to use Fibonacci level in this case. So Euro JPY, we talked about it already. Euro CAD, the market is now ranging, and in order to be able to use Fibonacci level, I think the pullback is not enough. This is way below 23.6%, but as you see, the market retraces backwards, and when it bounces and retraces backwards, then finally you can draw the Fibonacci level. And when you see the Kumo down, Kijun Sen down at that timing, that will be a great sell chance. But since it's not happening yet, it's not a time yet. Yeah, I think in this case, the Kumo and Kijun Sen are already down. So I expect the market breaks the support and continuously be downtrending. So simply I wait for the market breaking 1.4317 and continuously go down this way without using Fibonacci levels in this case. Yeah, so let's see. Let me take some other examples. So Euro Swiss franc, right now, this is also in the continuous reversing waves. So you can draw the Fibonacci on these reversing waves. And the best way you can use it in this situation is to see if this bounce was one of the Fibonacci levels between the previous high and the previous low. So let me draw it from the previous high and low like this, and the market was bounced 38.2%. It was 38.2%. There was a long wick pointing upwards and down and pullback, and now it's going down. So it looks like for the last 3 days it's been doji candles, and there's no trend for the last 3 days. It's been still consolidating, but I can still see the Kumo down, Kijun Sen down, so there is a potential downtrend continuation. So in this situation, the market is at the previous support from all the way from November 2020. The market is at the support level, and that's why it's kind of consolidating. But I can still see that the sellers are dominant than buyers, and I expect the market go down this way. So in that situation, I can already draw the Fibonacci level from the top on the 20th of October and all the way to down this way. Here on the tip of the wick for today, and see if the market bounces at one of these levels, 38.2%, 50%, or 61.8%. Because since this is a continuous reversing wave, we can expect the market goes down in this situation. It may bounce by the Tenkan-sen, or it may bounce by one of these Fibonacci levels and continuously go down that way. But when you start to see Kumo flat, Kijun Sen flat, then these bounces are not going to be helpful, So you have to just delete the Fibonacci retracement levels, because that's when the market becomes range. So you can't expect the bounce at these levels anymore. Okay, so Milo says, how can we differentiate an I wave and N wave? Does it need to go into range for a bit before continuing its trend to be considered N wave? Yeah, so N wave needs to happen by pullbacks and pushbacks. So you have to see the pullback and pushbacks. Otherwise, it will be I wave, simply. All right, let's see. Minoru says, if you look at a long time frame around 20th of April, it started the first move. Now it's around 50% of Fibonacci level. Yeah, so make sure that you see the waves on the recent N waves or recent V waves. So let me show some other examples. So let me change the time frame. Let me change it to, let's say, 5-minute chart. Because you can apply the same rule, same way to draw the Fibonacci level in 5-minute chart too, and you can find it so effective. So let me try to find a good example. Yeah, so I think this is, hold on. GBP/JPY, there was a double bottom, so I don't use Fibonacci bounce in this case. GBP/AUD, this is retracement so deeply, and it looks like it's a range, so I don't use this one. Let's see, in 5-minute chart, I think this is still retracing backwards. I'm just looking for a decent N wave to happen to be able to draw it. So, for example, CAD/JPY, I think this is a good one. So market has broken the previous support level in 5 on 91.94, and now it's going down. So it's retracing backwards now and consolidating, but you know, you can, in this case, you can take the previous high and previous low to capture Fibonacci bounce potentially. So I take the previous high here and all the way down on the low like this, and I see the 38% bounce once. So, and since this is downtrending in 5-minute chart, I expect the market bounces at here and continuously go down this way. Or if it breaks it, then it might go up. It might break the 38.2% and it goes up. And when it happens like this, you can see that this is now on the bullish wave. And when you start to see bullish wave, then you can't use Fibonacci level retracement anymore. So that means when the market breaks a 38.2% level, then I simply cancel the Fibonacci and I try to look for some other ways to sell. In this case, to look for the sell chance, or simply wait for the next reversing wave to happen, and then draw Fibonacci and see if this was a potential bounce, and at the breakout of the previous support in 5, that will be a great sell chance. We expect the market continuously go down this way. So we have to see charts on N formations. This is very important to see which way the market's going, and also to be able to see how to use Fibonacci levels. I mean, which high and which low to use in Fibonacci levels. This is very important. Yeah, so let's see. Let me back to some comments now. All right, let's see. Saeed says, how to find strong support and resistance by Ichimoku? You can find support resistance by Kijun Sen, or sometimes it bounces by Tenkan Sen. can be support resistance. So you can use one of these two lines to draw support resistance, or sometimes market bounces by single span B. So these three lines can be a great support resistance lines. Andriti says, is it possible to use Tenkan-sen as trading stop losses? Yeah, it is possible. Yeah, if the market keeps going up above Tenkan-sen, then you can move Tenkan-sen levels for the stop loss. And when the market breaks the Tenkan-sen, that will be an exit timing. Deborah says, hello, I know you're learning about stocks. Do you think you will eventually have lessons and teach how to trade stocks too? That I'm not sure. I'm not sure because my profession for now is Forex. So I keep talking about Forex markets. But if the stock market is, I'm confident in stock markets, then maybe I will. But I have to see the result for myself. And then I can be confident enough to share my experience to everyone. Oh, and by talking, looks like this is now becoming N wave bullish. So it slightly broke the previous high. So this is now on the bullish wave. So when it's on bullish wave, you don't use Fibonacci retracement like this anymore, because this is no more downtrending now in the wave formations. So I think that was a good timing to talk about if the Fibonacci is valid or not in this example. All right, yeah, good to see you everyone. Thank you for joining. Thank you for joining on this earlier live stream today. Since I got things to do at night time, I decided to do live a bit earlier time for today. And also, since my throat condition is not really good, I think I will end the live anytime soon. But before that, let me quickly check some comments. Some says, Sensei, you are an amazing teacher. Oh, thank you for the words. Very honest sharing. When bearish wave become a Y wave, how do you confirm reversal of a trend? Y wave did not make lower high, but reached near Kijun-sen. Yeah, so when you see Y wave, basically that's the range market. So until the market goes up or down on the next N wave or bearish N wave, we have to hold. Yeah, most likely when I see Y wave on any time frames, I will avoid to trade on that pair because it becomes very tricky. If it's P wave, that's nice, but if it's in Y wave, that might be difficult to trade. So simply, my advice is you better look at other pairs to trade. Oh, looks like it's been resisted here. So still, this Fibonacci level at 38% bounce is still valid. Exactly here. But as soon as you see the market close, the candlestick close comes above that level, then you better cancel Fibonacci retracement anymore. Let's see. Hans's run is ranging now to me. It's just retracing, ranging for now. All right, let's see. Hello, Mr. K. What about crypto? Do you work on it? No, I never trade crypto, and I don't think I will take any crypto trades. Ash says, if CADJPY is in 5 minutes goes up, will you call it a bullish flag pattern? Yeah, that is true. If it's up, then yes, we can call it a bullish flag. Yeah. Oh, Zebro, thank you for the comment. Yeah, I'm a little sick. Well, this is still not a thickness, but I feel my throat pain. So that's why maybe you realize my voice a bit lower today because I have pain in my throat. But I just wanted to say hi to everyone on this live stream and share my view about how I use Fibonacci level today briefly. That's why I just popped up and say hi to everyone. So yeah, and I guess I will end the live stream in about a couple minutes now. All right. Yeah, Hussein, I think Euro USD is ranging still, so better to stay away. Yeah, USD JPY is retracing backwards now, but not a good time to buy or sell. In my eyes, I think this is retracing, ranging, so we better wait until Kijun Sen turns bullish and look for buy chance on USD JPY. Milos says, is it normal that market seems to go in range really fast? Kept getting stopped out recently. Yeah, because this is when the long-term buyers and short-term sellers are fighting with each other. You know, it's a tug of war between long-term buyers and short-term sellers here, and that's why the market becomes very tricky, spiky. And this is when you simply stay away. Yeah, when the market is tricky, and if you're not confident or if you don't know what to do in this kind of situation, then my advice is to stay away until you find a confident market on it. Smart says, are you doing gold? I don't trade gold right now because it's ranging still. In terms of gold, I think it's still, yeah, this is ranging. So market once broke the P wave uppers here on the 21st, 25th of October. But for the next 2 days until today, it's bearish. And Kumo flat, Kijun Sen flat. So simply I stay away. I regard this as a very tricky market. So basically I stay away. Okay, so yeah, I guess I will end the live stream for now. So yeah, once again, thank you for joining. Sorry it was a bit earlier time for this live stream, but hopefully you enjoyed it or you enjoyed the archive video on this one. So hopefully you'll be able to draw the Fibonacci levels correctly and capture bounces correctly with the Ichimoku in this way. So yeah, hope I will see you soon. And until then, please stay safe, stay healthy, and stay gold. Alright, bye for now, everyone. Mata ne. Thank you.